All right. Hello, everybody. Let me know if the volume's off. Different setting today for the market open. Tried doing something a little bit different. I am not basically in my room right now. So, yeah, we're doing something a little bit different. Look, we've got a lot of news to get to. There's a lot of stuff going on. And it's actually like all tech related today, which is the interesting stuff. So, first, biggest news of the day is Palantir stuff. I'm going to do the opening bell before we get into it. But Palantir was recently named a leader in various categories. And we've got some Netflix, Google stuff to talk about. That's very important as well. We've got Microsoft and Microsoft and Netflix working together, and there's a bunch of different things. Jay Schwat, good morning. Cameron Vincent, good morning. David, good morning. Cameron, Bacon Bombs, what's up? A lot of different things to talk about. How many shares of Palantir is your goal? I mean, 5,000 would be the big goal, but we have 2,100 right now. Okay, so lots of different things to go over. Let me open up Webull real quick. The market seems to be pricing in 100 basis points hike, which is kind of where things are going in the context of how the market's looking as well. So let me share my screen real quick. Let's open this up. Here we go. Okay, so Palantir, as you can see, it's barely down in the pre-market, nothing too crazy, which is why I'm saying the market's kind of priced in a lot of stuff. Nothing's really down per se in the pre-market. I mean, it's red, but it's not crazy red. Some of it's even green. Let's go to the S&P. It ended yesterday at what, 390? That's where we're at? Or it's not 390, it's like 375. So that's stayed relative. Yeah, so 370. Oh, S&P is down 1% in the pre-market. Okay, so S&P is actually down about 4 points in the pre-market. But some individual stocks are doing pretty okay in that regard. Good morning. New house. No, it's not a new house. It's my old house, just not in my room. So that's what's going on with the S&P. Most stocks ready to be normal. We're going to see what happens in the market in the market open. The thing that I was looking at, I was reading some articles today, is like, okay, CPI print was bad. We know that was bad. So the question becomes, how does the market react to it? The market's expecting 100 basis points or 1% gain on the Fed funds rate, and then a 75 right after that. And if 1.75 cannot get inflation down, then we're going to have a really tricky situation in like September, October. But that is the goal for that. If the thesis is correct that inflation has peaked, then we're also going to be fine, right? Because we have so much of a hawkish Fed plus inflation peaking. The reason inflation is peaking is because commodities are now housing and energy is probably not explaining that thesis to be correct, but the argument is that commodities have started to go down, and that would signal that inflation is peaking. But we're going to see. So next week's CPI data is also going to be incredibly important as well. I also believe we got PPI data today, producer price index. I'm going to check that out right after the market open, and we can talk about that. But that's kind of the thing that's going on. Yeah, the market's up decently. At least I'm looking at it, it's about up a percent. All right, if you're new here, there is a bell, and in that bell, we open the market, and now the stock market is open. And that little gain I had in the market just went right back down. All right, what do we got? What do we have here? What do we have? Let's go to some big ones. So Palantir, we're going to go through the news that came out with Palantir in a second. 926. Okay, so no real change on Palantir. Roku's the same. S&P, yep, S&P is down 1%, 374. What else we got? Enphase 190, Google 22. So Google, we're going to talk about an article that came out about Google that I think is incredibly interesting, and something that I wanted to go over. There's lots of facts and numbers that we're going to go into to get into that article. Tesla, the head of AI, I forgot to mention this. Well, it happened last night, is leaving Tesla. The head of AI saying sayonara. Now, not the head of AI, the head of like the vision learning part of AI, and a very important person in the company, someone who has talked very publicly for the company, represented the company when they explain how Tesla is doing what they do. Snapchat, by the way, below 14. They've left. Now, they took like a 4-month vacation a couple of months ago, so people kind of knew they were ready to leave, but they left. I've asked a lot of people in the Tesla community how to interpret this, and they said it's not good. It's not like horrible, but it's also not great. So that's not the best for Tesla. But I mean, if you believe Tesla has the best technology in the world and artificial, then it doesn't really matter that much, right? Okay, so let me pull up this thing. Shout out to 178 people that are here. Thank you for being here. We have Palantir News. We're going to pull that up real quick. Let's pull this up so I can show that with you. They were named a leader in, yeah, here we go. So by an independent research firm, let me share this right now. They were named a leader in artificial intelligence and machine learning. Here we go. I just got in Dow slumps 400 points. Yeah, that was the notification I got. Okay, so Palantir Technologies, a leading builder of operating systems in the modern enterprise, today announced that it had been recognized as a leader in artificial intelligence and machine learning by a renowned research and advisory firm Forrester. Palantir was among the selected companies that Forrester invited to participate in the Forrester Wave of AI ML platforms Q3 22 report. Palantir was cited as a leader in this research. Palantir's Foundry operating system received the highest possible scores in the product vision, performance, market approach, and applications criteria. As stated in the report, Palantir Technologies forces a resilient platform for complex critical AI use cases, stuff like Meta Constellation. That stuff is not easy. Reference customers appreciate the breadth of capabilities within the platform, particularly for the security and governance of ML, which is critical in many environments. Palantir is a solid choice for companies who have heavy data requirements and want to mix classical ML techniques with deep learning ML techniques to build complex AI solutions. So first of all, that's great to know. I think we already knew that, but obviously having an independent research firm kind of substantiate and validate that claim, that's always good to know. This is not something that's going to move the stock price. This is not something that's going to do anything substantially different to the company. Rather, this is just good confirmation bias. And it lets you know, like, people who said that software is legit, it's actually kind of legit. All right. Well, COO Sham Shankar. Palantir was built to solve the world's most difficult problems with truly best-in-class technology. We believe makes sense. Akshay, the Palantir chief architect, says, we've had the privilege of working with the most demanding operational context with our customers, deploying software that connects the power of AI ML with frontline operations. We will continue to strengthen our products, whether centralized, federated, or at the edge across key industries. When they mean federated, they mean more dispersed. So this would be like kind of cloud computing, Palantir operational workflows, working with AWS, Azure, Google, etc. And that's pretty much it. So let's go to this Forrester Wave thing. I've never heard of these guys. I'm sure if anyone's worked in AI ML in the chat, you guys have probably heard of them. They are Forrester Wave. Yeah, so these guys are Forrester.com is basically this leading. Okay, here we go. Yeah. Let me share that real quick. Morning team, morning team, morning team. Hello, hello. So let's share the screen. Forrester Wave, Forrester Methodologies is a company that does this stuff. Gets to go blah 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 blah. They're almost like a research firm, and these research firms, they're kind of like middlemen, but they get so respected in the industry that they actually drive a lot of value for companies that they do the research for. Okay, so that's cool. Now let's go. So that's the news on Palantir. Let's go to the next thing that I wanted to talk about today. Here is an article. Where is it? Okay, so Dan Niles, if you guys don't know who he is he's famously on CNBC a lot, actually, and he talks about a variety of different things. Good morning, Legend of C. Thank you for being here. Let me share my screen. And here we go. So they have removed Google as a top 5 pick for 2022. We are removing Google from our list of top 5 picks. And I want to talk about why this happened. I'll make a video on this later as well, but I want to discuss it. So look at some of the numbers they pulled out. And this argument actually makes a lot of sense. Now, this is not a bearish argument on Google. The article concludes that once Google gets to its lows in the upcoming recession that they believe is going to happen in 2023, then they're going to buy a ton of Google stock because of how resilient and like strong the company is, all that stuff. But for now, they are removing Google as a top 5 stock pick of this year because they believe it's just not going to perform well. And here's why. In 2021, Google reached $258 billion in revenues. 29% of the ad. So Google had 30% of the entire advertising market. That's insane. Iceman, hey, Amit, just wanted to appreciate your work on YouTube. Thank you, man. I appreciate you for being here. While Facebook has 118 billion, which is 13% of the total ad industry revenue. With digital ad spending in total have grown from 12% to 2/3 share of the total 900 billion ad market. So there's about $1 trillion ad market, and digital spend takes up about 660 billion of it. Okay. During the Great Recession, Google revenue was only 24 billion. This was 2008, 2009, or 3% of the ad industry, while Facebook was 770 million and only 0.5% of the ad industry. So 11 years ago, or 13 years ago, Google and Facebook owned about 3.5% collectively of the ad market. last year they owned 42% of the entire ad market. So things have changed. Now, the reason this is incredibly important is because the level of growth that you got if you invested in Google and Facebook in 2008, 2009, because not only the internet was growing, but also the digital ad industry was growing, their ad products and technology were growing, was substantial. That is not necessarily the case anymore. Both traditional and digital ad spending is likely to get hit over the next 18 months. That's obvious. When a recession happens, ad spend goes down. The decline for 2 consecutive years last occurred in 1940. Digital ad spending, however, was up slightly in 2008 and only down mid-single digits since 2009. I believe history has skewed people's view of the resiliency of the online ad market. Google, in fact, saw revenues increase by 31% in 2008 and 9% in 2009 as the internet economy gained share. The much smaller Facebook saw revenues grew 78% and 186%. So even in the recession, Google and Facebook grew for their advertising. So why is this guy not bullish on Google and Facebook now? Because in the last recession, they grew so well. So why is he like, oh, they're bad right now? Well, the launch of the iPhone in January 2007 helped shift viewing habits online. So you could surf the internet from anywhere from just your camera, from your laptop, which means it involved a whole new atmosphere for advertisers to actually target people when they had these like little mini supercomputers in their pockets that they could then use. So they said, we thought Google should have been able to outperform the overall market even during a 30 to 50% decline. However, we believe the dollars available to the online ad companies going forward, including Google, will also be less than what we originally thought. And here's why. TikTok did $4 billion last year. They're going to do about $12 billion this year. That's another $8 billion that's not going to Google. Amazon did $31 billion in ad revenue in 2021, and got just ad revenue, not AWS, all that, just ad revenue, up 33% in Q4, and it's going to be focusing more on their ad business. That's $31 billion not going to Google. Apple did $4 billion in ad revenue, and that's going to likely 3x over the next, or that's up over 3x in 2021, primarily because of the privacy changes. So more companies, if you have this like app and you're like, hey, I'll go on Facebook to get people to download my app, like actually I'll go to the app store and I'll like do search targeting to get people to download my app, because Facebook ads are getting rough. And then Netflix, coming before the end of the year, which could be a big drain in ad dollars, is just done a partnership with Microsoft. I'm about to talk about that in a second. So they have 220 million subscribers. They have, I don't know, let's say 100 million of them or something. No, though, these are paying. Let's say, I don't know, 10 million more people start watching Netflix because they don't have to pay for a subscription. That's a lot of ad inventory that they have that is going to start to leave from the market instead of going into digital. So this basically concludes, we think the street consensus of 34% revenue growth at Google and 23% revenue growth at Facebook over the next few years is optimistic, to say the least. At some point in 2023, when the market hits its ultimate bottom, Google will be one of the first names we buy for the long term, given their culture of innovation, solid cash generation, and reasonable multiple compared to the long-term growth potential. But right now, an impending recession, online advertising share gains at TikTok, Amazon, new entrant Netflix, and less time spent by consumers online as they engage in travel and leisure. Everything's not in the pandemic anymore. People are going out. Means that Google is not a top 5 stock pick. I thought it was pretty interesting analysis. It actually informed my decision on it. Now, if I still want to buy Google, would I still buy it at like DCA? Yeah, because I would believe in it long term. But it's an incredibly interesting concept. Joel, what's up? Simon, I did get your email. I will be responding to you later today. Thank you for the email. See Jamie Jaimin just say the consumer's in great shape even if we go into recession. Yeah, and this is interesting because he's the one who was saying expect a hurricane about a couple months ago, right? I don't know. Things change so quickly with this stuff. But the reason Jamie Dimon is saying we're probably in a great shape or the consumer's in a great shape is because, again, there is a disconnect between Wall Street and Main Street. Main Street is everything's okay. Like, outside of inflation, jobs, wages, this stuff is good for the consumer, or in general for average people. So that's the thing. I've also heard that if we have a recession, it might be more technical than like real, right? Like it's going to be a recession, but it's going to be technical. It's going to suck, but it's not going to be real. So we might have like just a recession, but not like a recession. And we'll see if that happens. Celsius filed for Chapter 11. This is also correct. We're going to talk about Netflix, Microsoft in a second. But yes, Celsius has filed for Chapter 11. It's really sad, man. I don't know if anyone lost money on Celsius. I didn't even know Celsius was a thing before what is it? Before this thing happened. Like, I was like, what is Celsius? But apparently Celsius is like a super big thing or whatever. And yeah, they filed for Chapter 11 and they were being very, very cocky and arrogant, talking about all their average 18%, blah, 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 blah returns. And that's not the case anymore. Hello, Samuel. Hello. All right, let's share this Netflix Microsoft news. Let's read through this. This was incredibly interesting. Netflix is introducing advertising technology, and then we'll go back into Webull right after this. And they picked Microsoft as the partner for their new consumer subscription plan. So we are thrilled to be naming Netflix's technology and sales partner to help power their first ad-supported subscription offering. At launch, consumers will have more options to Netflix award-winning content. Marketers looking to Microsoft for their advertising needs will have access to Netflix through their premium connected TV inventory. Now, the reason they picked Microsoft is kind of down here, right? This is what the COO said. Microsoft has the proven ability to support all our advertising needs as we build together a new ad-supported offering. More importantly, Microsoft offered the flexibility to innovate over time as both the technology and sales side, as well as the strong privacy protections for our members. So Microsoft is going to be controlling the sales, the technology, the distribution, and the actual implementation of advertising. It's interesting why they picked Netflix over Comcast or Google that literally like their entire business models are 95% ads. Microsoft does a lot of other stuff besides advertising. But you know, they picked Microsoft. I guess I think one of the reasons was they didn't pick a like direct competitor, and one of the direct competitors is Microsoft and Google. Google and Comcast, just because they're all in the same business of like attention and people's eyes. Google with YouTube, Comcast with like all their TV properties. So that might have been the reason. Glitch Life, we're going to have two different recessions in it. You're going to have a supply side recession, a demand side recession, and they're going to be spaced out about a year apart. Okay, that's an interesting thought as well. I'm calling it NASDAQ will not new 52-week looks 52-week. Yeah, I mean, we might have hit it a while ago. We might have hit that bottom. I'll bet they'll be using Xandr. Microsoft just closed the acquisition this June. Yeah, 100%. They did. That's a great point, Sam. They did buy Xandr, which is a advertising technology. So, I don't know if it's a startup, but it's a company that they use. I have all my crypto in Voyager. Wow. Sorry, Matt. That's rough. That's tough. I never bought crypto like that, so I never had it in like Voyager or anything. It wasn't there. All right, let's go to CNBC real quick. I saw a video this morning that I wanted to show you guys. And here we go. Okay, so producer price index rises 1.1% in June. Okay, so in terms of, for those who are thinking about the PPI, that's not good. The reason that's not good is because that means that prices are increasing as well for producers, which makes sense. We thought that was going to happen, but that's happening for consumers and producers now. So overall, that's not the best. U.S. oil at 91. It is starting to drop. Next month's numbers seem to be bullish. Yeah, this is what Kramer was saying for why inflation might have been peaking, because if oil is dropping and all these things have peaked, then that's good. Then that means that that's why the market theoretically might be rallying at this point, right? And that's sort of the argument we're seeing right here. Okay. What did I want to show you guys? What did I want to show you? Where was this? All right, let's pull up this. There's a couple of ones I want to show you, but let's pull up. Okay, here we go. This is one of the main ones. All right. So let's talk about how the Fed is going to interpret these basis points.
Price in a Fed rate hike of 100 basis points. We should just call it 1 point, right, Steve, if I got that right?
1 percentage point, Joe, right? That would be the correct way to say it. Right?
Exactly.
Right? I know you're a scientist at heart, right?
We might as well say that, I think.
There you go.
Yeah.
Right. Well, anyway, I'm going to say a full 100 basis point rate hike from the Fed, now priced in for the July meeting, and then another 75 points for September. Markets now think the central bank is going to accelerate rate hikes and strike a restrictive monetary policy now within just 2 months. Here's the probability of 100 basis points at the meeting in less than 2 weeks. It jumped to 54%. That's according to Refinitiv. It had started the day, remember, at under 3%. And we remarked about how it jumped right after the CPI. And the chance of a follow-on 75 base point hike, now 63% for September, again, according to Refinitiv. The march towards higher Fed expectations began with that 9.1% print on the CPI inflation report. That was better than expectations, and was followed by a beige book that said there were, quote, substantial price increases across all Federal Reserve bank districts. 3 Fed speakers yesterday, they didn't outright endorse this full percentage point move, but they didn't rule it out either. Atlanta's Raphael Bostic said everything is in play.
So that means that like they're not ruling out a full percentage increase, but they are saying it could happen, right? And as a result of them saying that it could happen, that's a little you would say a little, you know, it's coming. Like, and if that's coming, then well, basically, when the Fed guy, one of the Fed chairs in Atlanta, who's not Jerome, right, like the chair of the Fed, when he said that, then that means they're not ruling it out, which signals to the market. It's kind of like when Bernanke and all these random people like start talking and stuff and just putting stuff out there. It lets the market know, okay, this is what the Fed is thinking overall. And as a result of that, then we are likely going to see that the market's going to bake it in. And if the market's baking it in, then the market has the potential to rally off of it. Now, again, what might be happening from a relative strength index for the RSIs that are oversold is that if the things that would make a bear market rally happen are as follows. Number one, commodities keep dropping. Number two, oil keeps dropping. Number three, inflation starts to go down. Number four, inventory start to increase in the next Walmart Target earnings, letting us know that consumer sentiment and demand is going down. And number four would be the Fed actually increasing by 1% or 1.75 over the next 2-3 meetings. All that stuff being baked in with inflation going down may signal to the market, okay, it's time for us to bake it in. Now, that might still lead to the crash. It just wouldn't happen now, which would mean like Chicken Genius and all these people that are saying like it's going to happen right now. And also, they may be wrong. They may just have to wait a little longer before they're right. Marcus, my prediction, the S&P 3,200 and NASDAQ 10,800 in the next weeks. Yeah, that's interesting because if the market believes inflation has peaked, that wouldn't happen. So I get the market would have to really believe that there's more pain to come from that perspective. I don't know. I guess we'll see. We will see. They'll just keep rising interest rates until unemployment rates go. Yeah, I was hearing that a lot of the interest rates will go up till the interest rates will keep going up to get unemployment to like 5 or 6% to like theoretically induce a recession. Which might be their way out, which would suck, at least for all those people. All hell will break loose if the Fed starts. Yeah, that would also happen. Yeah, but Chicken Genius thinks so unless oil rolls over, which is exactly what's happening so far. Interesting. We will see. Predictions will either come true or they will not come true. Let's look up another video that I wanted to show you guys here. So let's break down how Netflix is going to actually do this ad-supported technology. Let's share this one. And let's talk about that. How many rooms in your house, different background for every day in the week? Yeah, I just felt today. Let's do different backgrounds. If Google's not a top 5 stock, what is Palantir? Well, I mean, they're talking about top 5 stock in terms of returns. Like, I mean, you might have some oil stocks that are top 5, right? But I think in general, Google's obviously like a top 5 company.
What would it look like? What does non-intrusive look like? Is there a model for that? You watch everything, Sarah. I do not because I have to, because I'm looking for something to watch. But I know what a non-intrusive ad looks like. Do you think they can thread that needle?
I think they can. I think a lot of their competitors have already done it pretty well. If you take a look at Hulu has 70% of its subscribers signed up to the ad-supported tier. And that's because they've introduced a lot of streaming-friendly ads.
Let me say something real quick. I've used Hulu with ads. It is the most gut-wrenching experience. Like I literally wanted, like I want to throw my TV off a building when I watch Hulu. The reason for this is because they put an ad every 2 seconds. Like, and their ads are 2 minutes long or 90 seconds long. And it's like, all right, I'll sit through the 90 seconds. And then 2 minutes later, tell me I'm not the only one with this experience with Hulu with that. It's insane. Like I'm watching a 20-minute show and there's 4 ad breaks and all of them are so long. And it's not like the ads are necessarily horrible. It's that there's just so many of them. And I'm like, this is ridiculous at this point. So I hope Netflix, and if Netflix is really about the consumer, I hope they don't do that.
Things like pause ads, so you can pause an advertisement if you're walking away from the television, binge ads, etc. The other thing I think is really important to remember is that when Netflix launched its streaming service, Joe, there wasn't a sophisticated streaming advertising product out there, and brands weren't used to buying it. So of course, to them, this seemed foreign for a really long time. But fast forward to 2022, streaming advertising really is mainstream. Almost every single one of their competitors has an ad-supported tier. If they don't have one yet, like Disney, they're planning on introducing one. So I think Netflix is going to be able to thread the needle well. My question is, are they too little too late? Some of their competitors, as I mentioned, Disney with Hulu, have been doing this for years. So Netflix has a lot of brand relationships, a lot of catch up to do if they really want to get this started by the end of the year.
What is the main thing that Netflix needs to sort of face the day of reckoning. I'm not sure it's just that the ad supply, that was a big concession, obviously, but the subscriber growth is probably never going to match what expectations were a year or two ago, not even globally. And then there's the difficulty of doing hit after hit after hit. When you have so much competition for the best writers, the best scripts, the best ideas, I don't know necessarily whether monetizing the service with ads it's certainly not a panacea for Netflix's long-term problems.
That is an absolutely correct point. First of all, they have to get the password sharing under control. They've acknowledged that they think there's at least 100 million accounts that they could recoup if they get that under control. Second of all, they really got to figure out some of these licensing relationships. Now that all the other media companies have taken their content back, Netflix has to really figure out how they're going to create enough original content that's going to make the service feel as good as it used to be. And then the final thing that I think Netflix really is going to have to figure out is discoverability. How many times, Joe, have you been on Netflix and you see 12 different slates on your screen and you're thinking, I don't really know what I should watch. Is this going to be good? Let me Google it and see what other people think. I mean, this wastes a lot of time. And it's very frustrating. I think what they need to figure out is how do they make that user experience a little bit better? I feel like they can do it, but the challenge is they're going into a really bear market and investors want to see the progress quickly. And this is a lot of different things that they're going to have to take on in a very short amount of time.
Okay, lots of thoughts there to analyze. Number one, someone just said binge ads. What is this woman on? Yeah, I didn't get what is binging ads. Like, you can't fast forward the ads. What do you like? I don't know what binging ads means, but okay. So, a couple things. Number one, now Theo has a really good comment in the chat, right? If Netflix will do ads, does that bring YouTube into play as more of a competitor in the future? Can Alphabet or Google get studios to license movies? So a couple things. Number one, Google is already kind of licensing movies, but you have to pay for them on YouTube. So, well, yeah, I guess it's not licensing at that point. It's just like a marketplace for movies. Licensing movies would be interesting. So like theoretically, could Google pay, I don't know, $20 million to have Inception exclusively on YouTube? Maybe that could happen. That would be very interesting, especially if Netflix is doing ads. Because you might ask the question, but here's the thing, right? You might ask the question, why does YouTube not do that already? Google has way more money than Netflix. Why don't they license movies independently? And I don't think they do this for the reason that Sarah, the analyst here, said at the bottom, which is discoverability. I don't think YouTube cares that much about paying $20 million for Inception, because Google has 20 billion videos uploaded a second, right? That are like theoretically higher quality than Inception in the context of they're algorithmically and search-based and very hyper-specific to the individual person. So if I like, I don't know, I like cooking egg videos. I make a bunch of stuff with eggs. Like my favorite cooking YouTuber that's uploading videos about eggs, they're going to have a more authentic and meaningful relationship with me and keep me coming back to the platform because they make eggs, right? Versus like some random Inception movie. So the problem about discoverability, which she mentioned at the end, is the number one issue with Netflix. Is what I've been screaming about for the past like 2 years, which is that they don't have an algorithm because they don't have user-generated content. Netflix is just a media property with all these pieces of content. And I don't blame them for not having a meaningful discovery mechanism, because you can't get content discovered if you have a bunch of random categories: rom-com, drama, suspense. It's like, how do you know what type of rom-com I like? Like, you can make some assumptions based on what I click and consume, but at the end of the day, YouTube can hyper specify I like XYZ specific type of dating show, which means I might like another type of content. Like, there's just the vast trove of data YouTube has to create a recommendation engine is why they are a $500 billion company independent of Google. So that's why I think it's a very different sort of relationship here. And that's why I think Netflix is going to be struggling in this advertising thing. I don't even know how well the ads are going to be targeted. As much as, YouTube ads are annoying, and I have premium anymore, so I don't watch the ads. But when I did, they were pretty specific. I mean, I actually have another channel, the Can You Learn to Speak My Guy channel with me and Tom. That's not upgraded to premium. And I see ads there, and I was getting ads for StreamYard because I didn't fucking buy the stupid StreamYard shit yet. And I'm like, hey, like these ads aren't that kind of bad. I might buy StreamYard. So I think those ads are more specific at the end of the day, which is kind of at least a little bit better. Can't wait to see Amit's new egg-based channel. Yes, it is coming. Google stock split tomorrow. That is also correct. The original business model was to digitize movie consumption. That is true. That is true. User-generated content has fundamentally changed everything. Jackalope, good morning. Good morning, Jackalope. I don't think their content is good enough to offset the additional losses of subs if they introduce ads and crack down on account sharing. I agree. And that's why I think the collapse of Netflix, it might not be fully done yet. The collapse of Netflix is just given the lack of content. I could not believe anyone argued they were a technology company over that. And, I love Joseph Carlson, but when he was buying it at 700, and it's not that it was a wrong stock pick. I just never understood his thesis on Netflix. I mean, I understood it, but I was just like, bro, really? That's the thesis? And he just thought they could get all this growth. And I'm just like, their content sucks. It was such a elementary analysis for me when it came to, I was like, their content fucking sucks. That's why I don't like it. Sometimes, if the iPhone sucked as a product, no matter what explanation you would give around Apple, you'd be like, yeah, but the iPhone sucks. No one likes using it. But the product works, right? Tesla, the product is awesome. When a consumer product, the product has to have some type of meaning or purpose at that point. I'm very curious what their ROC is on original content. I don't think it's very good and wonder if they can fix this with ads. I think Netflix's moat is gone. Yeah, I mean, Netflix has been losing money for a while. They just the subscriber growth kind of allows it to continue. The other thing to remember about Netflix is they give their subscription model. The reason it's a loss leader, same thing as Spotify, is because in some countries, Netflix is $2 a month because they can't charge $15. So just to penetrate certain markets, you have to basically give away your product for free. And hopefully after 5 years, people become so familiar, they decide to pay per month, right? It's hard with subscription. With ads, there's, if Netflix starts selling ads in India, and there's a lot of advertising in India, they may be able to create a much better, maybe even margin on those ads because they don't have to be a loss leader with their product necessarily. That could happen as well. Someone was saying Microsoft could buy Netflix. Now I don't think the government would ever allow that, even though theoretically Netflix is not one of those big companies that you have to be scared that someone is buying in terms of big tech. But yeah, I mean, who knows? They might just be able to get bought. Netflix should launch a disc via post service as an additional subscription model, bringing vintage and world cinema title. That's interesting. I just don't think people have DVD players anymore. At least I don't. But that would be interesting. You're nuts if you think Netflix original content sucks. They've had some of the biggest shows movies ever, ran through war shows with them. Yeah, look, the problem is the world. Here's the place where I disagree, Jason. The world moves so quickly. So Don't Look Up or House of Cards or Stranger Things, they're irrelevant tomorrow. And when I mean irrelevant, I mean people want new stuff. We are, as consumers, we're like animals. We need things that are new. So you can have a library of that content, but if all 220 million of your subscribers have seen it, well, you need something new. And the challenge is, how do you create something at that level of quality new every single week? YouTube does it every single second. That's the difference, right? And I think that's kind of the problem here. All right, guys, I'm out. Thank you, 250 people, for being here so much. I appreciate you guys. Have a bunch of different videos coming out today. Today's Thursday, right? Yeah, so we are 2 days away from the end of the week. I hope you have a great Thursday. I've got a lot of stuff to get done. Hope you accomplish your goals, get closer to stuff, do what you need to do. If you want to follow along what I'm doing in the day, Twitter @AmitIsInvesting. You can catch me there. And that's pretty much it. I will see you guys tomorrow on a morning live stream, 9:20 a.m. Eastern. Thank you all for being here. Appreciate you guys. And yeah, see you guys tomorrow. Bye-bye.